Today, we are diving into a topic that has sparked a lot of conversations across the country: the no tax on tips policy proposed in the USA presidential campaign. This policy aims to eliminate taxes on the tips earned by servers, bartenders, and other tipped employees. To understand the real-world impact of this proposal, we visited a bustling local restaurant and spoke with Sarah, a dedicated server who has been in the industry for over 5 years. Sarah shared her insights on how this policy could affect her daily life and income. Sarah explained that tips make up a significant portion of her income, often accounting for more than half of her total earnings. She mentioned that the current taxation on tips can sometimes feel like a penalty for hard work, as a substantial part of her earnings is taken away. With the proposed no tax on tips policy, Sarah believes she would be able to take home more of what she earns, which would help her cover essential expenses like rent, utilities, and groceries more comfortably. The policy could also have a broader impact on the restaurant industry as a whole. By allowing servers to keep more of their tips, it could lead to higher job satisfaction and lower turnover rates. This is particularly important in an industry known for its high employee turnover. Sarah noted that happier employees are more likely to stay in their jobs longer, providing better service to customers and creating a more positive dining experience overall. However, there are also potential challenges to consider. Some critics argue that eliminating taxes on tips could lead to discrepancies in income reporting and make it harder for the government to track earnings accurately. This could potentially result in less tax revenue for public services. Additionally, there is a concern that employers might reduce base wages, relying more heavily on tips to compensate their staff, which could create financial instability for workers during slower business periods. Despite these concerns, Sarah remains optimistic. She believes that the no tax on tips policy could provide much-needed financial relief for many in the service industry. She hopes that if implemented, it would be done in a way that ensures fair treatment and financial stability for all employees. Join us as we delve deeper into this topic, speaking with more industry professionals, economists, and policymakers to get a comprehensive understanding of the no tax on tips policy. We'll explore its potential to reshape the service industry and what it could mean for the millions of workers who rely on tips as a vital part of their income. Stay tuned as we uncover the various facets of this proposal and its implications for the future.
Honestly, not having to pay taxes on my tips would be a huge relief. It feels like we're being double taxed sometimes, and every little bit helps when you're living paycheck to paycheck. When you rely on tips to make ends meet, every dollar counts. It's not just about the money, it's about feeling valued for the hard work we put in every day. This change could make a real difference in our lives, giving us a bit more financial stability and peace of mind.
But it's not all sunshine and rainbows. While the new policy aims to streamline the process and ensure fair distribution of tips, there are significant concerns that cannot be ignored. The intention behind the policy is undoubtedly noble, aiming to create a more equitable environment for workers who rely heavily on tips as a part of their income. However, the implementation of such policies often brings about unforeseen challenges and complications that need to be addressed proactively. The hospitality industry is complex, and any changes to its financial structure can have wide-ranging implications. Critics argue that this policy could lead to complications and potential fraud. They believe that the lack of stringent oversight could open doors to various forms of exploitation and misuse. For instance, without proper checks and balances, there is a risk that some individuals might manipulate the system to their advantage, thereby undermining the very purpose of the policy. The fear is that dishonest practices could become rampant, making it difficult to ensure that tips are distributed fairly among all employees. This could create an environment where trust is eroded and the intended benefits of the policy are lost. Tax experts warn that it might be difficult to track and verify tip income accurately, especially in a bustling environment where cash transactions are frequent. This could result in discrepancies and errors in reporting. The challenge lies in the nature of the hospitality industry, where cash tips are a common occurrence. Unlike digital transactions, cash tips are harder to monitor and record, leading to potential gaps in financial reporting. This lack of transparency can create loopholes that are easily exploited, resulting in significant financial discrepancies. Moreover, the administrative burden on businesses to comply with new regulations could be substantial, adding to their operational costs, leading to underreporting and loss of revenue for essential services. The potential shortfall in tax collection could impact funding for critical public services such as healthcare, education, and infrastructure. Ensuring compliance and accuracy in reporting is crucial to avoid these pitfalls. The ripple effect of underreporting can be far-reaching, affecting not just the immediate stakeholders but the broader community as well. Public services rely heavily on tax revenue, and any shortfall can lead to budget cuts, reduced services, and a decline in the quality of life for many. Therefore, it is imperative that the policy includes robust mechanisms for monitoring and enforcement to safeguard against these risks. The success of the policy will depend on its ability to balance the needs of workers, businesses, and the government, ensuring that all parties benefit without compromising the integrity of the system.
The federal government collects billions in taxes from tips each year. Removing this revenue could significantly impact funding for essential programs like Social Security and Medicare. These programs rely heavily on tax revenue to provide benefits to millions of Americans, especially the elderly and disabled. Without this funding, the government might face challenges in maintaining the current level of support and services. This potential budget shortfall raises concerns about the long-term sustainability of these critical social safety nets.
So, we've explored the various angles of this proposed policy change. We've delved into the potential impacts it could have on different sectors, from the economy to social welfare. Our analysis has covered both the positive aspects and the challenges that lie ahead. We've looked at how this policy could potentially streamline operations, reduce redundancies, and bring about a more efficient system overall. However, it's also important to consider the broader picture and the ripple effects that such a change could have on various stakeholders. It's clear that while there are potential benefits, such as increased efficiency and potential cost savings, there are also significant concerns that need to be addressed. These include the possible negative effects on small businesses and the broader implications for the workforce. Small businesses in particular may face challenges in adapting to new regulations and requirements, which could lead to increased operational costs and potential layoffs. The workforce, too, may experience disruptions as new skills and competencies become necessary to navigate the changing landscape. There are also significant concerns that need to be addressed. Stakeholders have voiced their worries about the long-term sustainability of these changes and the readiness of the infrastructure to support them. It's crucial that these issues are carefully considered before any final decisions are made. The infrastructure, both physical and digital, must be robust enough to handle the new demands placed upon it. This includes ensuring that there are adequate resources and support systems in place to facilitate a smooth transition. Additionally, the long-term sustainability of these changes must be evaluated to ensure that they do not lead to unintended consequences down the line. Thank you for joining us on this comprehensive journey through the intricacies of the proposed policy change. Your engagement and interest are what drive these important discussions. It's through informed and active participation that we can collectively navigate the complexities of policy changes and work towards solutions that benefit everyone. We encourage you to continue to stay informed and to engage with these issues in your communities and networks. By doing so, you contribute to a more informed and proactive society. And until next time, stay informed. Keep questioning, keep learning, and stay engaged with the issues that matter. Your awareness and participation are key to shaping a better future for all. Remember, the power to influence change lies in the hands of informed and engaged citizens. By staying updated on policy developments and actively participating in discussions, you play a crucial role in shaping the direction of our society. So, keep reading, keep questioning, and most importantly, keep engaging with the world around you. Together, we can build a more informed, equitable, and prosperous future for everyone. As we wrap up, let's remember that policy changes are not just abstract concepts. They have real-world implications that affect our daily lives. By staying informed and involved, we can ensure that these changes lead to positive outcomes for all. So, let's continue to engage, discuss, and advocate for policies that promote fairness and equity. Your voice matters, and together, we can make a difference. Thank you for watching, and we'll see you next time.